when you see the same signal, like, or the same directional move, that's always the most powerful, right? So for me, just looking at the daily chart, this is a very, very crisp bull flag. And again, bull flags, you should see some sort of move up. I think the first big resistance for me is this June low, which is around 17.6. So if we get to 17.6, you could see some pressure there. But I think it actually could get through, at least in the near term, and kind of test these lows right under here, maybe around that 18.4 level, which kind of coincides with your 18-ish area as well.
Yeah.
So I think that would be kind of my upside. I'm in the camp where, yeah, I think come January again, you get that regulation in the space, and then big money starts coming in, and initially it'll be Bitcoin, right? So I mean, that's the one that everyone kind of cues on. That's the one where, you know, you have Mike Novogratz, some of these other big Wall Street guys kind of honing in on. But the question is, you know, in a few years, is with that transparency, does there emerge a better Bitcoin that does what Bitcoin does better, right? And that's always a risk. And you're right, just like any investment, you have to be aware of that. And it's just
In today's video, we will have Gareth Soloway, the President, CFO, and Chief Market Strategist of InTheMoneyStocks.com and VerifiedInvestingCrypto.com make a new Bitcoin price prediction. Gareth will also show you how there's insane pressure happening in the next 30 days to crypto and how prices can change drastically. So make sure you pay close attention until the end. As Gareth says, we're getting closer to the final leg down in Bitcoin. Also, he will go through the risks of Bitcoin and how you should manage your investments to ensure you protect them. So this will be a value-packed video. First things first, is Gareth making any Bitcoin trades right now?
Yeah, very little Bitcoin trades. Overall, very little crypto trading. Just because for me, it's there's just not a ton of volatility. Like even if you go back to June, it's, you know, I mean, this is for Bitcoin. This is not a lot of volatility. Like something like this bull flag would be tradable. You know, you just basically look, if it fails, you exit. But like you could pop up. But again, the upside is kind of on the limited side. Like even if it goes to 18-ish or a little above 18. It's not that big of a move for the risk that you wake up one morning and there's another FTX scenario with another player out there. And that makes me a little nervous about, you know, putting up any sort of sizable moves. That's awesome. You guys have been trading it. I think that's fantastic. You know, one of the trades that I did not too long ago was NEAR, NEAR, which is this one. And this one, we're in from about 45 cents or so. And the idea here was that it was an oversold condition. You had a beautiful little bottoming tail right here. So basically just playing that bottoming tail, and it's floated up. I mean, we're up like, you know, 15, 20% at this point. Nothing crazy, but you know, little trades like that I'll do, but they're really small. Like I'm not confident enough in this market to go long heavily, definitely on the smaller side.
Are there any altcoins we should look after too, even if they give us small percentages?
You can see Avalanche kind of hit here, and then it kind of did get above this. So as long as it holds, I would say Avalanche needs to hold like 1330. I'd want to see price stay above that and then kind of go sideways and then potentially have another leg up. Upside could be back to this kind of low area around just under 15. What's kind of crazy is that, you know, all these targets, like even Bitcoin at to 18,000, historically, it's such a small move percentage wise. Like remember in the olden days where it's like, oh, Bitcoin just ran 30% in 2 days. Now we're like, oh, Bitcoin might go up 5% in a few days. No, dude, in a bear market, 3% is awesome. You know, I think that's what people need to hear too, is like, you know, a lot of retail crowd, they're like, oh, you know, you didn't get 20% on that trade. And it's like, dude, you got to adapt to the market conditions. And right now, if you're going long, you're not looking for 20% because you'll end up losing money because it'll go up 3 or 5 and then go down 10, right? So 100%, 3% is fantastic in this environment. And I'm the same way. Like, you know, for me, I'm a chart guy. So if it has a chart, I can look at it. But I want charts of cryptos that really can't be manipulated too much. And then once you get down on the list, you start getting into the pump and dumps and some different stuff like that. So it just makes it harder to kind of trust the analysis. But I think one of the greatest things about like a Bitcoin is, you know, if you're in a country where the inflation is out of control, they at least, you know, if you're in Venezuela or some of these other countries, you have a way to kind of cushion yourself, right, from that, those, 100% inflation type things. And that's also a nice positive. It's a universal, currency, and it's a store of safety in crazy times.
Bitcoin is somehow attached to stocks since the beginning. When the stock market thrives, Bitcoin also does it. The same happens when it crashes. People have been asking for the longest time if there will be a time when Bitcoin finally goes on its own, so it ultimately becomes the safe haven everyone expects and gets its market. Gareth also has something to say about this.
I'm in the camp, so I am absolutely in the camp that I think that at some point, either in 2023 or 2024, maybe 2023, you're going to see a flip where Bitcoin has been considered a risk asset. It goes down with the stock market. I actually think Bitcoin will bottom out and start heading up while the stock market makes another leg down. And I think the key to that, and this is the key, guys, is that once you get that transparency of regulation in the space, you're going to see in big institutions saying, okay, listen, the economy is falling into a worse and worse recession, which is not good for stocks, right? Stocks rely on earnings. If earnings are going down, those valuations have to decline. And so then the question is, well, where do they put their money? Well, right now, there's no one going near crypto in the institutional game. It's too risky. FTX just crushed any hope of anyone coming in prior to regulation. But you get regulation, you get transparency, you get rules where they have to get audited, they have to do whatever. Now institutions are going to say, okay, well, I have to put my money. Remember, institutions feel this need to always deploy capital versus just letting it sit there. A lot of investors, they want returns. Doesn't matter if it's a bear market, they still want returns. And so then there's going to be this pressure to deploy. And my hope is that that's the trigger for kind of this inverse relationship where stocks can go down and crypto can actually rally.
So with that in mind, let's see what's happening right now and what's coming next. We know the final leg down is coming, but what's coming in the short term?
I'm kind of in the same camp as you, at least, and again, we use different things, which I think is one of the coolest things about it is that, it shows that there's multiple ways. And when you see the same signal, like, or the same directional move, that's always the most powerful, right? So for me, just looking at the daily chart, this is a very, very crisp bull flag. And again, bull flags, you should see some sort of move up. I think the first big resistance for me is this June low, which is around 17.6. So if we get to 17.6, you could see some pressure there. But I think it actually could get through, at least in the near term, and kind of test these lows right under here, maybe around that 18.4 level, which kind of coincides with your 18-ish area as well.
Yeah.
So I think that would be kind of my upside. I'm in the camp where, yeah, I think come January again, we probably do see some more pressure. Everything to me doesn't stink like a bottom, right?
Yeah.
It doesn't have those same characteristics. You don't have the panic jump out a window type, Bitcoin's never going to survive and all that stuff. And that's notoriously what bottoms are. They make you think it's the end of the world, essentially. So the question is, how low will it go? I mean, again, I compare it. I've been comparing recently the Lehman Brothers collapse in 2008 with the FTX collapse and kind of the similarities there. And then how long did the S&P take to bottom out after that? And then how much lower did the S&P go? And the S&P went about 40 to 45% lower. It took about 5 to 6 months. So if that's true, then you're talking like a Mayish potential bottom in Bitcoin. It would be somewhere around that 9,000 level. And the reason why it's kind of interesting around 9,000 is that it would break the 10, which would freak out a lot of people. Like if you're looking for where stops are, they're going to be at 10. They're going to be right below 10. And then you get back into that sub 10 level on Bitcoin. And I could see people getting really bearish. Like that would be kind of like breaking the camel's back in a way. So yeah, I mean, I think that's one interesting possibility. So for me, I think we're close to the lows. I think this is the final kind of over the next few months. It'll be like the final leg down. But then hopefully we do put in a bottom finally, and Bitcoin can actually start an uptrend again.
And we're still ongoing. There's something fundamental that you need to hear. What are the risks of Bitcoin? What if somehow a crypto better than Bitcoin becomes a reality?
You get that regulation in the space, and then big money starts coming in, and initially it'll be Bitcoin, right? So I mean, that's the one that everyone kind of cues on. That's the one where you have Mike Novogratz, some of these other big Wall Street guys kind of honing in on. But the question is, in a few years, is with that transparency, does there emerge a better Bitcoin that does what Bitcoin does better, right? And that's always a risk. And you're right, just like any investment, you have to be aware of that. And it's just one more reason why, for me, there's a certain amount of money that I'll allocate towards my top two, Ethereum and Bitcoin, when I decide to really kind of start to load up. And then, that's by no means, it'll probably be about 10% of my investable money. And that'll be where it is. And, if it goes to $1 million, I make a lot of money. If it goes to zero, I don't lose all my money. And I think that's the key when you're an investor. You always have to remember, man, it's not so much what you make, it's what you don't lose.
And we're closing in with an important message. Gareth Soloway has been saying this for a while. If you have been following our channel, this is the base of the technical analysis. History tends to repeat. So what if it does again?
And I agree with you. And it sucks to have to talk about that kind of stuff because, it's not like we want people to ever lose money. The idea is you want everyone to make money and do well. But the bottom line is history tends to repeat, and we've seen these type of scenarios over. And to be honest, I just did a video earlier today about how if you look at the Great Depression and the 1915 period to the Roaring 20s, and number one, the chart. In fact, let me show you. Listen, this will be kind of the final thing we go over here. But it's just history is the greatest thing to replicate future. And the reason it is because humans don't change, right? We're ruled by greed and fear, emotion. And so you could go back to the 1500s and look at the tulip mania, right? Where a tulip could buy you a home. It got so ridiculous, and then it collapsed. And it literally, we know where tulip, now you can get tulips at the same value as, it's $1 a bulb or something. But so if you look at this, right? So this is from 95 leading into the dot-com. Here's the dot-com collapse. Here's your 2007 high with your Great Recession. And then look at the run that the markets had. Just incredible, right? It puts the dot-com to shame, really.
Yeah.
It really does.
Yeah, it does.
And then what I love to show is if you go to the Dow Jones, and this is why I love charts, let's go all the way back to, look at that. If by the way, if that ended up happening, S&P goes down to like sub 1,000, which would be just horrific. But, and again, who knows if it's, it doesn't, remember, history doesn't necessarily repeat, but it rhymes. And the point is that it's scary how similar the charts are that we're leading into the great. And basically, some of the other interesting little tidbits here is that, so in the teens and early 1920s, what was going on? Well, you had the use of the cars became almost like a common thing, right? People started buying cars and getting cars, and that changed transportation. Now you could go shop, you could drive places and shop and spend. The consumer started to spend. And then what happened here also is in the 20s, everyone started to get electricity. Yes. So now you could go shopping at nighttime. Before it was like it got dark, you had candles and that was it. Now, so in the Roaring 20s, there was this huge amount of consumer spending because of this. And then you look into the recent periods of like the 90s into 2000s, we had the dawn of the internet, right? And the internet, what did that? Well, now you can shop on Amazon. You can shop on any website and buy everything. And it creates this consumer spending. And then ultimately, we know that the Great Depression occurred, right?
Thank you so much for watching. If you enjoyed this video, please leave a like and subscribe. We appreciate it so we can bring more daily crypto videos like this. Thanks.